Good morning, friends and fellow traders. This is Doug Campbell with Right Way Options, and this is the morning market prep video for July 25th, 2024. Well, I hope everyone had a great evening. Yesterday was probably just a little bit on the stressful side with the selling that came into the market. How about we take a look at these markets and see what happened overnight and determine how we might want to approach the market for today. Well, first off, if we take a look at Asian markets last night, Asian markets had a pretty rough day, selling off substantially across the board. Asian markets were down 1.29%. The Nikkei fell 1,285 points last night to down 3.23%. South Korea was 1.74% lower. Hong Kong dropped another 1.67%, and Shanghai down 0.5% on the day. If we take a look at European markets are decidedly bearish this morning, with the DAX being down 257 points or 1.40%. FTSE's down 0.85%, and the CAC is down 2.14%. with a miss on some earnings showing that consumers are getting very weak in Europe. If we take a look at U.S. futures, we're also lower across the board, but much more modestly this morning, with the Dow only down 0.12%, S&P 500 down 0.29%, and NASDAQ futures down 0.46%. As we wait for a really big day, a really big morning of data, economic data, as well as a big round of earnings data. So let's take a look at other things here in the market. We've got oil this morning, sharply lower. Oil down $1.38 a barrel at 76.21 a barrel. We've got Brent down $1.41 at 80.30 a barrel, and natural gas is looking just a little bit higher this morning, possibly putting in a lower high, but this has been a heavily beat down area of the market. Precious metals are getting hammered here this morning. Gold down sharply here. Let me see if I can get the exact. The exact gold futures right now down 36.20. We've been down nearly $40 an ounce on gold this morning. Silver down substantially, over 4%, gapping sharply lower. Copper, platinum, and palladium all lower here this morning. If we take a look at cryptos sharply lower as well. Bitcoin this morning, right at this moment, down $1,766 a coin, and we're red across the board in cryptos here this morning. Bonds this morning. Well, our bonds are down just a little bit on the 10s. The 10-year bond is at 4.22. The 2-year bond is at 4.36. And the 30-year bond is climbing to 4.49%. So kind of an interesting morning setting up here for today. So what does all this mean? Well, how about we settle in? Let's buckle up. Let's get ready for the Thursday edition of the Morning Market Prep video. Good morning once again, everyone, and thank you so much for being here. I do truly appreciate it. Let's take a look at these charts and see if we can decide how we might want to approach the market for today. And remember, let's shake out that bias. Let's look at the chart for what it is and not what we want it to be in the market. Well, first off, in the diamonds, even with all of this major pulling back that we have had in the diamonds, you can see we're still holding an upside trend. So as bad as this may have felt for a lot of folks, and it's what I had been warning all, for the last couple of weeks, be careful chasing overextended stocks. because when a sell-off does come, those folks are going to be heavily damaged in the move. And you can see pretty strong sell-off here, and it looks like we're going to test this trend line here this morning. I had mentioned yesterday that possibility, if we were to pull back, we might test this level of price support, and if that were to fail, then this a little bit more substantial support here. And that is what happened on the day. Not that I can see the future, just looking at the support and resistance levels in the chart. Now, if we continue to see bearish action today, if the bears were to push on through this downtrend here in the chart, well, if we take a look across here, there is a little tiny bit of price support that we might catch right in here. If that were to fail, then I think that possibility we could be coming down into the tops of this little platform consolidation, and possibly even the more major area of price support down in here. This would be a real painful sell-off. And one of the reasons, guys, that we're seeing this is, if you caught the news yesterday, New York Fed President William Dudley advocated that there may be a situation coming that the Fed should start cutting right now, because we're starting to see signs of recession really creeping up in Europe as their numbers just literally collapsed. China is having the same problem, and it is Dudley's belief that we may need to cut urgently here soon to prevent that kind of thing here in the United States. So our economy has been slowing, and some of the data has been masking that situation. So keep a close eye on this. A lot of volatility could be in the market over the next few days. With that in mind, and considering the data that we have coming here this morning, let's take a look at our SPY. Oh, by the way, if the bulls find inspiration here on the day, well, the first thing we need to do is get back up here above this resistance in the chart. And popping back up there certainly seems possible. And then if we do that, I'm going to suggest this area right here might be a little bit tougher to get through in that chart. You can see we had that gap down. We've got all of that price action right in that area. If we can, then we start looking up into this area and potentially filling that gap here. Remember, this downtrend is awfully steep and not likely one that can be sustained for a long period of time without a little bit of a relief bounce. If we take a look at our SPY, SPY confirmed our downtrend here, as I was suggesting it might yesterday. There's our lower high followed by a lower low. We are officially in a downtrend after breaking our upside trend here in the market. If the bears were to continue to find inspiration, breaking down below this, as you can see, we're trying to do that here this morning, could send us down into here, filling that gap in the chart, and then maybe even on lower to test some of these support levels down in here. So this could get pretty ugly if those bears were to really grab a hold here on some of the data today, that if it happens to be disappointing. Now, if the bulls were to find inspiration for today, there certainly is that possibility, because a short-term oversold condition, we often get relief rallies. So first thing we would look for is a pushback up to see if we can break back through that resistance in the chart. If we can get that done, then we're going to be dealing with this downtrend here in the chart as well. Breaking through there, I think we might have that opportunity to come up here and fill this gap and then be pushing back up here toward that resistance high. But boy, that's going to take some work here. We're going to need some good data to help us along the way. As I suggested yesterday, we might see a test of that 50-day moving average. We got that done all at once yesterday. So breaking down below there to fill that gap would be a follow-through failure of that 50. And that could be something that really raises some fear in the market. So watch that carefully. If we were to take a look at our QQQ continues in its downtrend. We're following these lower highs here, followed by lower lows in the market. And clearly a pretty ugly situation here as well. They're just a major deleveraging here from big tech, and it's one of the things that I talked about for a long time. We had never seen such a centric market, and what that might bring could be dangerous. And well, we're seeing that here as we break down in the QQQ. Now, if the bears could continue to find some reason to sell in here. Notice we've tested this area of price support yesterday. The next level lower would be, well, perhaps right in here or all the way down into this more major level of the QQQ for a potential test to the downside. And keep in mind that we have already given up our 50-day moving average in the chart. So if the bulls find inspiration, and again, relief rallies happen all the time here in the market, doesn't necessarily mean we turn bullish, but we would get a relief rally, and perhaps today we could see that happen. And if we get that relief rally, I'm going to start looking for areas up in here as we push back up toward that 50-day moving average and price resistance in the chart. That's going to be the critical area here as to whether or not we can push on through that that resistance. So watch that carefully here on any rally back for those big areas of resistance in the NASDAQ. And then IWM. Had a good day most of the day, and then finally succumbed to a little bit of selling. And you can see we now have that possibility that we've created a little bit of a lower high here in IWM. And if it were to follow through to the downside and break this low, then we would officially have a lower high, lower low, and the beginning of a potential downtrend. But this has been exceedingly bullish, and it really is benefiting from that rotation out of tech. So if those bears were to continue to find inspiration, watch this area here for a break of that support. And if that were to break, then we might start slipping into some of these little gaps that we've left behind, pushing this on down to the downside. But if those bulls find inspiration here today, we're going to need to reclaim this area up here, push back up and reclaim some of that area, and then we're going to need to get out of that little downtrending area here and prove that we can hold up in this area before we can move on up and start attacking some of those areas in the chart above. Of course, data today could certainly make that happen at any time. You will want to keep in mind that we are still a long ways away from our 50-day moving average here, so we're pretty stretched out. If the bears get some energy here today, then the move lower could be quick and sharp. Let's take a look at our VIX. Our VIX, obviously, we found that higher low here in the VIX and a little bit of fear coming into the market. So we made that big push up, pulled back, pop to the upside. And like I said, have always said, that's where the real selling begins. Now the question is, will we follow through with that selling today, or will we get a little bit of relief on that move? I think it'll all be determined by the data and the earnings that we get today, whether or not we will see that relief or not. If we continue to stretch on up, well, keep in mind, if we break this downtrend and we end up holding up here, a higher low up here, yeah, it could get brutal pretty quickly. So watch that carefully if that were to occur. If the bulls have anything to say about it and can push this back down below this area, that'd be a good sign for a little bit of relief coming in the market. Let's take a look at our T20s. T21, 22, even after that nasty selling yesterday, we didn't make it all the way back down here to the bearish reversal side of the market. So we still have room here this morning that we could move sharply lower here yet to the downside to complete this reversal into the bullish reversal zone of T21, 22. So we'll have to keep a pretty close eye on that. That would be tells us that there's a pretty good point move to the downside possible. However, if that data is good today, well, we certainly have opened up a big upside opportunity as well. So we'll have to watch that closely. And I would really be careful and be watchful for some big point moves and potentially some big point whipsaws. Be really careful of knee-jerk reaction trading right now, because we could pop, we could drop, and then just really quickly reverse on those numbers. So be careful with that knee-jerk reaction trading. If we take a look at our T2108, now T2108 pulled back yesterday, and it ended up at the end of the day breaking this little support that we created in here. But I got to tell you, there's really nothing wrong with this. This is still showing quite an improvement here in the market. We broke that downtrend. We're still above some support levels. We're still above 50% here in the chart. So I'm still going to give this to the bulls. They still have an opportunity to hang on here if the data can help them do that. If the data happens to come in disappointing and the bears continue to attack, well, that could slip pretty quickly. But right now I've got to still give that to the bulls. And if we look at T2107, I'm going to say the same. We ended up breaking this support in here. Again, we've been really frothy up here in this very toppy area of the market. So not a surprise we're pulling back. What is a surprise that the energy that has shown up in that sell-off, and how that probably has punished a lot of folks that chased here in the market. Now, if you look at this, I still got to give this to the bulls. We're still well above our 50% area here in the chart. We've got some support area below this in here. So I'm still going to give this up to the bulls, that they could hold on in here depending on how that data comes out. And T2101, if there was any good news yesterday at all for the bulls, it was the fact that we didn't see much of a breadth improvement here on the sell side. If you're a bull, we do not want to see this stretching up as we're selling, showing more momentum coming in to the bearish side of the market. So if we continue to sink, what every bull would better keep your fingers crossed for, sees this breadth reverse and start declining again in the market. Just the opposite is true. We don't want to see a relief rally in the market as the breadth declines. We need to see those bulls really come in with some energy on this, or that will embolden the bears after a relief rally. So watch that carefully here in the market. A lot of things to be paying attention to at the moment. Now let's take a look at our economic calendar for today. And our economic calendar, it's going to be a busy one here this morning. As you can see here, we're going to start off before the bell. We've got a durable goods order report, and what we've got here in durable goods is the consensus is suggesting that it's going to improve. But some of the things that we have been seeing in the internals of the market, just to take housing for example, big declines in those housing numbers. The consumer is slowing. So if we happen to miss on this number here, this could be important. Right now they're expecting an improvement to a 0.3 in the month over month, an transportation, an improvement from a negative 0.1 to a positive 0.2, and core capital goods from a negative 0.6 to a positive 0.2. So that would be a nice improvement if that were the case, and that could help ring in that relief rally here in the market. If we can see that the consumers are hanging in there strong. If this comes in weaker than expected, that would likely disappoint the market substantially. GDP number, we're looking for a GDP number to come in at 2.0, up from 1.4, and personal consumption, they're looking for that to be at 1.9, an increase up from 1.5. Again, personal consumption, that might be a problem for us here in the market. So watch that carefully. And then international trading goods, well, we're looking for some pretty ugly deficits here in international trading goods, but what they're suggesting is it will be an improvement. Where the last time we were a negative $100 billion, and they're looking for it to come in at a negative $98 billion. So a little improvement there on that. And then, of course, jobless claims. Jobless claims, they're looking for 238,000 in consensus. I keep saying, and I still believe that one day we're going to get a big change here in the jobless claims as the economy slows. Well, clearly employers don't need people as much as they needed them before. And so we could one day see a sudden jump in this in claims. So watch this carefully. Perhaps it's not now. If it comes in like this, I think the market will be okay with it. So watch that carefully today. Big data. Then we've got retail sales inventories, wholesale sales inventories. We have been seeing those increasing here just slightly, and that, again, that is a sign that consumers are slowing, but the consensus right now is suggesting that we see a decline in those wholesale inventories today. So watch that. We've got a natural gas in here. We've got a Kansas City Fed manufacturing number. Last time it was a -8. Consensus is looking for a -5. We'll see if that comes in when one of our last manufacturing numbers missed dramatically to the downside. So watch that closely. We have some auctions in here for bonds, probably most notable the 7-year note there, and then the Fed balance sheet after the bell. Now going into Friday, we can't release any of that pressure because we're going to come out with the core PCE number, which is the Fed's favorite measure of inflation. So keep an eye on that. There'll be some stress wondering how that's going to come out. And then, of course, the consumer sentiment number and the Baker Hughes rig count. Let's take a look at our earnings calendar here for today. Now, our earnings calendar, super busy, y'all. There's no way I can cover all of the reports. So I'm going to encourage everyone, once again, to make sure you click that link below the title of the video. That'll take you back to the morning blog where you can come on in or come to the website and get the full blog where you can get that full list of notables. So please make sure, click that more button below the title of the video and come on over to the blog. First off, quite a few here today, and I'm just going to run through just a couple here. First off, we're going to hear from Dow Chemical here this morning. We'll want to be paying attention to that. We're going to hear from Harley Davidson here today. We're going to hear from Dr. Pepper Keurig here this morning. We're going to hear from Tractor Supply. We've got Pool in there. So and Valero Energy. Whoops. There we go. And Valero Energy that will be part of the morning report. So quite a few reports in there to be paying attention to. You'll need to be pretty focused here on the day because there's going to be a lot of data in that possibility of some substantial market moves in the market as we react. Now, afternoon today, we also have a very busy day. I'll cover a couple of those. We're going to hear from Sam Adams this afternoon. We've got Boyd that will be in there. We've got Juniper that will be reporting today. We're going to hear from Deckers. We've got Phillips Edison that will be in there today. We've got Skechers that will be reporting. We've got a Weyerhaeuser that will be in there. Weight Watchers will be in there. So another big round of potential reports this afternoon that could add in that volatility as we wait for that core PCE number Friday morning. So how about we take a look at some stocks that could be setting up for today? But before we do that, everyone, if you could do me this quick favor, if this is the first time you've seen these videos, if you please click that subscribe button on YouTube and also click that bell icon when it pops up so you'll be notified every time I post a video. And if you find these videos to be useful or helpful, if you could do me that favor, that would be click that thumbs up button, leave a brief comment. That helps the channel to continue to grow. I want to apologize that I didn't get a chance to answer those comments yesterday. As you know, we had an open house yesterday, and well, I had a lot of questions. It was a really fun day, being able to help folks with some ideas to improve their trading. So it was really busy, and I just didn't get a chance to go answer those today. And I want to let everyone know that we are open again today for that. And below the title of the video today, there will be another link that can bring you in. You can register and come on over into the trading room today for another full day of open house. So if you didn't get a chance yesterday, we'd love to see you there today. For those folks that were there yesterday, love to see you again, and hope that I can say something to help you with your trading. Let's take a look at some of these stocks that could be setting up. Remember, guys, these are not recommendations to buy or sell any security. You need to do your own due diligence. Be very, very careful in this market. Obviously, a lot of emotion in this market right now that could move us substantially. So do a good job of protecting your capital. Might be one of the better things that you can do right now as we wait for some of the dust to settle on this emotion in the market. That being said, there's some really good charts out there. Take a look at AKAM. I have a price alert on this, and it had a rough day there on AKAM yesterday with that selling. And unfortunately, it's going to report coming up. So there still may be an opportunity for a quick trade in here before the earnings. But what I was looking at is that opportunity that this might hold in this area and pop and get a little bit of opportunity in there before that earnings report. Keep an eye on AKAM. Take a look at TAP. Beautiful little chart. Mentioned this yesterday. And again, this was given to me from a member of the Right Way Options trading room. You know, one of the great benefits of a trading room is not me on the microphone. It's it is the trained eyes in the group bringing up trade ideas like this and showing all of these different opportunities. That is a major benefit of being in a trading room where you have all of those trained folks, all those eyes on the market. So TAP, beautiful potential trade here with a nice little hold. And one of the things that really telling yesterday is we've got a big, if you look right here, it's kind of, I've got it dimmed down, but it's in the consumer defensive sector, and we're seeing a lot of stocks in that consumer defensive sector showing some good signs. Again, when the market starts feeling uncomfortable or uncertain, or when we're rotating, institutions are rotating out of overbought areas of the market, you often see a rotation into more safety type areas of the market and good strong dividend payers, and that's certainly the case here in TAP. Now let's take a look. We've got Best Buy that could also be setting up in here. It's been trying really hard. It was in the news yesterday, making some changes on how they're going to do some things. They're really looking forward to a big product cycle replacement. So watch this carefully. If that were to pop through up there, certainly an opportunity in that chart. Let's take a look at CPB, Campbell's Soup. Campbell's Soup holding in this trend. Now, this was an awfully rough pullback that came in here all of a sudden on Campbell's, but you can see trying to push back up here now. Again, that defensive sector area, and if we can pop through up here and hold, looks like there may be some opportunity in Campbell's Soup. Take a look at KHC. KHC is something that, oh my gosh, we have hated here for quite a while. breaking this downtrend, holding a beautiful higher low in here, and that opportunity that KHC could start pushing on up to the upside. I would watch that one closely. Certainly has that possibility to continue if this rotation in the market were to maintain underway. If we take a look at some of those other places, take a look at Hershey's chocolate, nice little resting pattern here after breaking this downtrend, pushing to the upside, showing bullishness. Walmart is in the consumer defensive area, and that is setting up nicely here, looking really good. Take a look at Colgate. Now, Colgate has pulled back here recently, back here to test support and trend. This has been phenomenal this year to the upside. I would keep a close eye on Colgate. Keep an eye on things like really old, boring stuff like CLX that might be breaking this trend and trying to hold in here on this higher low pattern. If we can gain some energy in that area, we'll see things like Mondelez start to come up. There's a downtrend break here in Mondelez, trying to hold a higher low, and that opportunity that could start moving to the upside. So keep a close eye on that defensive sector area of the market. Let's take a look at oil. When we look at oil, well, as I've said, we've got to be really, really careful when we push through. This was a break of support, broke down, and then we pushed up strongly. That impulse wave really pushed up strongly. We needed that to hold some kind of support here in the chart, and unfortunately that's given up back down here. This is a very, very choppy area of the market in oil. Watch that closely. There are things in that oil sector that have held up better, and you can see FANG here was one that was looking like it was going to break out, but now we have this major concern here in the market of a weakening consumer. So watch that carefully. We could see some short trades starting to set up here on these charts, and there are places in the market where there are some pretty decent clues that our consumer is very, very weak still. Take a look at Disney continuing to fall hard on some ugly charts out there on that negative side of the market. So be really, really careful about what you choose here in the market. Take a look at Broadcom moving down in this downtrend, breaking support in here in a potential short, breaking through to the downside. We're seeing a lot of that happening, and particularly in the tech area of the market. A lot of those breakdowns and short trade setups in quite a few places. So you'll have to watch those very, very closely. Now, one area that has been coming around and starting to look pretty decent is some of the things in the drug maker area. We have hated on Pfizer for a very long time, and now Pfizer is starting to come up here and show some patterns. Now, keep in mind, I have a bias on this. I am holding a position in Pfizer, but starting to make those signs here for an upside move. And if you look at that weekly, nice little inverted bottoming pattern, inverted head and shoulders bottoming pattern in here starting to show on Pfizer. You could also take a look at BMY making that nice little move up out of this bottom. I believe I mentioned this one yesterday in the morning prep, and that had a nice follow-through move yesterday to the upside. So with that, guys, I apologize. I'm running this video a little bit long. I want to wish you all a fantastic day. I want to wish you great results in your trading. Thank you so much for being here. I hope to see you in the trading room today for the open house, and I'll wish you all the best in your trading day. Take care, everyone.